So welcome to those who are joining us online and also those who are with us here in Camperdown. My name is Greg Fox. I'm a professor of respiratory medicine and an academic lead with the Sydney Vietnam Academic Network. I'm pleased to welcome you all today to this exciting event, which is looking at supporting women entrepreneurs in Vietnam. Before we begin, though, I'd like to offer an acknowledgement of country. Here we are on Gadigal land, and I'd like to pay my respects to elders past, present and emerging, and acknowledge also the diverse ethnic groups in Vietnam as well, and the cultural heritage that they have brought to Vietnam, and also to pay my respects to elders past, present and emerging in Vietnam as well. So we're very privileged today to have Russell Toth speaking. He's a doctor in the School of Economics in the Faculty of Arts and Social Sciences, and his background is as a development microeconomist. His work focuses on the development of the private sector with projects overlapping environmental, agricultural, and behavioural economics. And his work has taken him to Vietnam. And in this context, he's been a part of a team awarded a grant through the Asian Development Bank to focus on women's entrepreneurship. And so he's going to talk to us today about the topic of supporting women entrepreneurs. During this session, we'll hear from Russell, and then afterwards we'll have a chance for a Q&A mediated by Professor Sandra Aldays, who is also from the University of Sydney, from the Business School. And there'll be a chance for people online as well as here in person to ask questions. So without further ado, I'd like you to welcome Dr. Russell Toth. Thank you, Russell.
Thanks, Greg, and it's great to be here with all of you. Really excited to talk about this project that's underway. As you'll see, I'll be talking about a specific research project, so we'll be supporting women entrepreneurs in Vietnam in a very specific way through helping them get access to bank loans. So first, just a little bit on my background. I'll give some context around the kind of work that I do and then get into it. So you can tell from my accent, I wasn't born in Australia. I grew up in Canada and then lived in Eastern Europe after high school. That was a really shaping experience for me. And then did my undergrad and postgrad studies in the US. I wrote a PhD dissertation on household entrepreneurship in Indonesia. So I kind of stumbled upon that. I was interested in kind of small businesses and business development in emerging markets, and was thinking about questions like what, in many countries like Indonesia, like Vietnam, a relatively large percentage of the population are running a business or are an entrepreneur, but the vast majority of those businesses are really tiny businesses. So I was wondering, why don't these businesses grow? Is it about, lack of entrepreneurial skill, that we call human capital in economics? Is it lack of access to finance? That's a popular theory. So those are the kinds of things I was thinking about, and Indonesia had great data. And so that led me to work on Indonesia. And then, it was, Australia was a draw to be in the region and work on Asia and Pacific. So that's kind of how you kind of stumble forward in life onto things. So I moved to Sydney, moved to the School of Economics about a decade ago. And then, I was already actively working on Indonesia and then started working on a number of other countries in Asia Pacific. So my work, really, the way I brand myself is as someone who works on private sector development, often touching on other topics like agriculture, sometimes environmental economics, behavioral economics, et cetera, usually overlapping on projects that are essentially about private sector development. So this was a little map that I made online illustrating places I've done work or have ongoing projects. So I'm really excited about private sector development and thinking about development economics. So my subfield is development economics. It's concerned with poverty and economic development, mostly in emerging markets. And my, within that, my focus is really on the private sector. So since I was young, I was interested in the private sector and business and thought that was a really important area of the economy. As I mentioned, I lived in Hungary for a few years, so I had this experience of growing up in Canada. Then I lived in a transition country, moved there about 10 years after the wall came down, and kind of Hungary was transitioning to a market economy. So that was really a stark lesson in how the private sector can perform differently around the world. Hungary's GDP per capita was a lot lower than Canada's at that time, and still is. So that really further sparked my interest. And in terms of thinking about where we can have impact, the reality is that a lot of the game around economic development is around the private sector. Aid flows are declining as a percentage of GDP in many countries. So this is just a simple graph that shows overseas development assistance is the orange, remittances, so people migrating to countries like Australia and sending money back, has been growing rapidly in the last 20 years. And then the dark blue is foreign direct investment. Again, that's private sector activity. And this is, the numbers are in levels and billions there. Many countries are growing faster than the ODA is growing. So, aid is shrinking as a percentage of many economies. And ultimately, government is also an important source of spending. Government revenues are limited by the tax base, which is basically generated by the private sector. So that's why I'm on a kind of macro level, I'm really excited about the private sector. But I'm a microeconomist, so my work focuses on use a better laser here. So I'm really interested in how do we get the private sector working efficiently, especially in areas that impact the poor. So for example, small businesses, whether business owners or people who work in small businesses, in agriculture. Many of the poor in developing countries are based in rural areas and are connected to the agricultural sector. And then thinking about whether we can use kind of more action-oriented research to provide insights that might nudge the private sector towards socially beneficial outcomes, ideally finding win-wins. And then hopefully the project I'll talk about today is an example of that. So that's kind of my background. Two things I want to say about my discipline before I get into this project is kind of a background if you don't know a lot about economics or development economics. So, development economics has really changed a lot in the last, say, 20, 25 years. So traditionally, going back to the 90s, development economics relied heavily on theory. So we would write down theories of how economies work or fail to work and work out predictions from theory. But a lot of that work wasn't directly engaged with data. And to the extent we would use data, it was often macro data, very broad descriptions of how an economy is doing. However, since not the last 1990s, the late 1990s, development economics has really changed a lot. It's focused a lot more on the details of how development works, how specific projects and programs work. And a lot of work is focused on program evaluation using methods like field experiments, or we've kind of stolen this term from medicine, randomized controlled trials. So the 2019 Nobel Prize in Economics was awarded to Banerjee, Duflo, and Kramer, basically for this revolution that had happened in the preceding, within 20 years. It was an area of work that basically was non-existent in the late 90s. And 20 years later, they received a Nobel Prize for this work. So that's one big thing in thinking about what economists do and development economists do. And then a related idea is this talk that I'll use this metaphor, the economist as plumber. So Esther Duflo, who was on the previous slide, winning the Nobel Prize, she gave this talk. This is like 6 years ago, called The Economist as Plumber. And there's this idea of a metaphor of a plumber to describe the work of development economists and other economists who kind of get their hands dirty by getting into the details of policymaking and decision-making processes. So the idea is that, theory provides us with important structure for our work. The big ideas that we test are often still derived from the mathematical theories that have been there for a while in our field, but a lot of the details behind what works for policy may not be well informed by existing theories. The existing theories just don't tell you these really small decisions in the details of how you design a program or a policy, how to get it right. We don't have a theory that really guides us on that. So, in this kind of paper, she's talking about working with governments to do this, but we can just as easily work with private sector actors. So, she talks about, taking on the responsibility of engaging with the details of policymaking, adopting the mindset of a plumber. Plumbers try to predict as well as possible what may work in the real world, mindful that tinkering and adjusting will be necessary since our models give us very little theoretical guidance on what and how certain details matter. So this is kind of an approach to doing economics that's much more about talking to people in the real world, coming alongside them and working with them to figure things out. So that's kind of two pieces of background to motivate this project. So, so the project I'll talk about for the rest of this talk is on increasing access to finance for women-owned or led small and medium enterprises in Vietnam. So I'll call women-owned or led small and medium enterprise WSME, shorten that. And this is a joint project with David Raitzer and Marcus Tausig. So, kind of broad motivation, SMEs and WSMEs are an important market segment in emerging markets. So for my whole career, I've been working on small businesses, how we help small businesses, how we help them grow, how we identify the high growth businesses, how we help them get access to finance or other inputs that they need to do well and to thrive. Okay, I've worked on that for my whole career. I'm sure I'll work on that for the rest of my career. So just to provide some broad numbers. So if we're just talking about micro, small, and medium enterprises in general, in this paper, Miriam Brunn, who's a World Bank economist, has estimated that, this is from 2017, but roughly speaking, in developing countries, that there's a $5.2 trillion annual financing gap for micro, small, and medium enterprises. So globally, she estimates that businesses around the world in developing countries, emerging markets, could absorb over $5 trillion a year to grow their businesses, which they aren't getting. Okay, so that's like 3 times the annual GDP of Australia, for example. Okay, so there's a lot to do there. There's a lot of reasons why that gap might be there and things we can do to try to overcome it. And then within this is for all SMEs. Within this, women are estimated to face a particular gap in access to finance of 1.5 trillion, which is, the gap is larger than the proportion of businesses that are run by women. So in recent years, there's been a number of global and national initiatives that have emerged to help women entrepreneurs, particularly in access to finance. Famously, Ivanka Trump was leading one of those programs. So there's kind of this perspective that supporting women entrepreneurs is something that's socially good, but it's also just good business. It's an undertapped market. There's a lot of potential there for financial institutions and others to support women entrepreneurs. Okay, so speaking specifically about Vietnam, Here's some data. I'm going to talk a bit in the next couple of slides about this report that was done by the IFC 2017. The IFC is the International Finance Corporation, which is basically the private sector development arm of the World Bank group. So, as of 2017, in Vietnam, women owned about 21% of formal enterprises, so registered enterprises. 57% of those are micro enterprises, 42% are SMEs, and they're defining these categories in terms of revenue in US dollar equivalent. So 100,000 USD in revenue, 100,000 to 15 million. And then the top 1% of enterprises are large enterprises with more than 15 million USD in revenue. So we'll be focusing on this kind of middle segment, and this is missing many unregistered enterprises. Just to be clear, there's many more micro enterprises that don't have formal registration. However, with these of the formal registered businesses, women's businesses have similar average size to male-owned businesses in terms of assets, in terms of employees, in terms of revenues. However, as of 2017, if you ask WSMEs and male-owned businesses, if they've received a bank loan in the last 2 years, 37% of WSMEs said they had, 40% of male-owned businesses said that they'd received a loan. Women's businesses are less likely to get a loan. Even when they do get a loan or they do qualify, the women-owned businesses tend to receive, they're more likely to receive less than what they had requested, and for lower amounts than men, even though, overall their businesses are roughly of the same size. So the IFC estimated the WSME financing gap specifically for Vietnam at a little over $1 billion US dollars per year. At that time, around 2017, of the roughly 25 private commercial banks in Vietnam, there really wasn't a lot of programming specific to women entrepreneurs. The large majority of these 25, I think as of 2017, maybe all, weren't even segmenting their database by gender. So they couldn't even tell you how many loans they were giving to women versus men, for example. That started to change, and there's been a few banks that have started to segment their data and develop products and programs that are targeted towards women entrepreneurs. Another thing that this report tackled is the potential for bias around women entrepreneurs. So I don't know if I want to read this whole quote, but basically they did a bunch of qualitative interviews and quantitative work interviewing people in the banking ecosystem. And they found that there was a lot of beliefs about women entrepreneurs. For example, that they're less business savvy, they require more support, they're costlier customers to acquire, they're more risk averse, they typically don't own the family business they manage, they have lower financial management skills, and there's other social and traditional expectations about women business owners. But in the report, they actually, got some more objective data, and they found that women entrepreneurs running SMEs weren't more risk averse. They run similar sized enterprises to men, and they also have similar objectives and aspirations to grow their business in the future as men do. If they have family responsibilities, they find ways to manage them. For example, they build a team so they can share the work in their business and make that work. Women borrowers also have lower default rates, so they're actually a lower risk to lend to. So they're more likely to repay their loans. There was one bank they worked with that they found that the default rate for women was half the default rate for men. I think it was like 1% for women, around 2% for men. This is just one bank, but just an anecdote. They have, many women entrepreneurs have good knowledge of financial management, and they're eager to learn and network and grow as an entrepreneur and grow their business. So what we wanted to do is to try to kind of build on this new awareness of women entrepreneurs in the banking sector, and to try to work with a specific financial institution to kind of help build up their lending focus on women entrepreneurs. And we particularly wanted to focus on kind of back-end interventions, so more about how the bank is doing stuff than on the kind of front end. So in terms of loan products and say training or other things for the entrepreneurs themselves. There's been some research in this area in recent years, not a huge amount. A lot of the funding that goes to research supports work on micro enterprises rather than the next step up to kind of these growing small businesses. So there's still there's some evidence, but a lot remains to be done about why these financing gaps might exist and what can be done to most effectively address them. So to date, to the extent that there's been research, a lot of it's focused on kind of front end, on lending product design and borrower capacity. So giving women entrepreneurs formal training, providing them with business mentorship, even consulting services. That's been tested in some papers. One example from my own work, this wasn't done in Vietnam, but in Myanmar, we did a project where we studied in small and medium enterprise lending innovation in Myanmar. So a bank partnered with a mobile money company to assess loans purely based on past mobile money volumes. So mobile money is a kind of payment system that has been popular in a lot of emerging markets. And it relies on local agents who are often small business owners to process transactions. And so the innovation here was that the bank was willing to lend to small businesses purely based on their past transaction volumes. So normally banks would go through a big subjective credit scoring process where a loan officer goes out and talks to the business owner, they pledge collateral and all this stuff. And that can allow a lot of opportunities for bias and other frictions to get into the lending process. This was purely based on, we get the data from the mobile money company and then we offer you a loan. The loan product was really successful. It had a low default rate and really high take up. A low default rate, even though there was no collateral pledged and there wasn't much direct contact between the bank and the borrower. And about half of the borrowers were women. So that was a way higher rate than normally you would see in SME lending. So that's an example of like a front-end innovation where you're providing finance using an alternative data to do credit scoring and be able to provide access to finance to women entrepreneurs that weren't otherwise accessing bank financing. But in this project, we really wanted to focus more on the back end of bank operations and internal lending incentives specifically for WSME lending, since there's really, like, I wouldn't say zero, but very little rigorous research there. So we had the opportunity to start working on this in the context of a large loan that was provided by the Asian Development Bank and a consortium of financial institutions to expand access to finance for SMEs in general. Okay, so this was 500 million USD in funding that's been provided by this international consortium to a bank in Vietnam. And then under the auspices of that bigger loan, there was kind of support that's coming to the bank to work on innovations in WSME lending. So that's supported by WeFi, which is one of those programs I mentioned earlier that's supporting women entrepreneurs around the world. So we're undertaking, they're calling it a randomized controlled trial study here, could call it a field experiment on financial inclusion for WSMEs. So that's kind of how the project came together. So the partner bank is Vietnam Prosperity Bank, VP Bank. VP Bank is the third largest bank in Vietnam by assets. They have over 200 branches across the country. And we're really just working with their SME lending division. So they have branches that would serve retail clients, and then they have branches that really focused on SME. So we're really focused on that part of the bank. And within that, we're focused on micro SME lending, and I'll tell you in a second how that's defined. So there's 51 branches doing micro SME lending. 10 of them are exclusively focused on micro SME. Those are 5 each in Hanoi and Ho Chi Minh City. And then the other 41 are in like provincial areas, and those branches have staff who are lending to micro SMEs and what they call upper SMEs, which are bigger loans. So the bank segments its lending by size. So just for context, GDP per capita in Vietnam is about 2,800 USD. So just to put it in relative terms to Australia. So basically, if you want to borrow money for your business for under 5 or 10,000 USD, you would go to the retail division of the bank. So we're not looking at those loans. Those would be often unregistered businesses or smaller registered businesses, basically household enterprises. Then enterprise borrowers borrowing from about 10,000 up to 150,000 USD are considered micro SME. So that's the loan segment we're looking at. The average loan size there is about 20,000 USD. So if you kind of multiply it out, divide Australia's GDP per capita by 2,800 and multiply it out, these are like 400,000 AUD loans. So pretty good sized, like small business kind of lending in relative terms. So our process, well, this project was first conceived of maybe 3 or 4 years ago, and then like many researchers, we had our fieldwork delayed by the pandemic, and the loan was delayed and all these things. So we spent a couple of years waiting. But then in 2022, it finally seemed like we could start traveling again and working on this. So throughout 2022 and early 2023, we spent a lot of time working with VP Bank staff in their SME division, which has really been amazing. They've been great to work with. Really been a privilege to partner with them on this and do the plumbing stuff, really get into the details of like everything about how they do SME lending. So we really wanted to understand their existing work, including their existing WSME programming. They had partnered in the last couple of years with an NGO in Vietnam to do some lending to women. And one of the things we're doing with them is kind of building on that existing program, and also to understand their goals and interests. So it was really important for us to come up with something to work on with them that they could actually pick up and run with when our project ends. So we don't want to just test something, do it for a year, and then they're like, why would we ever do this again? This doesn't make sense for us. So we really wanted to make sure this is something that could integrate with their systems, be something that would provide lessons that then they could take and run with in the future. And we also had the opportunity to travel around Vietnam, visit a lot of their branches, talk to their staff, branch managers, loan officers, ask them a lot of questions about how things work from their perspective. So meeting frontline staff and women entrepreneurs that were connected to some of these branches. So there was really a lot of learning. It's hugely informative. Even talking to the headquarters staff, you get a certain kind of impression and set of assumptions, and some of those are really undermined by talking to people who are on the front line. So that was hugely valuable and inspired some of the key decisions that we kind of made along the way. So what do we want to test? So ideally for a project like this, we want to test interventions that have some novelty. Maybe there's some uncertainty about their effectiveness. It's kind of an opportunity for the bank to think a little bit outside the box and do something they haven't done before. We want to do something that's going to generate broader insights for policy and knowledge creation. So we don't want to necessarily just replicate something that's already been tested in a similar context. And ideally, we want to do something that's amenable to rigorous empirical study. So you can kind of see this like kind of a R&D process or a research lab where we have the resources to do a lot more data collection and testing and tweaking and looking at things and seeing what's really happening, and try to test out interventions that kind of push the envelope a little bit and hopefully come up with some lessons that are scalable for our partner and add to global knowledge for other financial institutions and others who want to support women entrepreneurs. So, there were some things that we considered and discarded. For example, client training. So training women entrepreneurs, it wasn't well aligned with this objective of looking more at how the bank operates. And there's already been quite a bit of work in that area. The literature on training is very mixed. So we didn't really want to focus on that. We also thought about credit scoring processes. Could there be bias in the credit scoring process, in loan approvals by gender? There were some issues there with, how amenable that process would be to change, and there's issues with testing in that context. There was also discussions around changing the core KPIs, key performance indicators that lending agents face. That was too much of a policy change for the bank to consider. So given the time scale we were working on, that wasn't feasible to consider. So these are things that we discussed and ended up discarding. And we ended up honing in on two focused areas. So I'll give you a brief overview and then talk in more detail about what we're doing on these. So the first is what I'll call the loan introduction study. Basically, what we're going to do is work with the bank to develop a policy where they can incentivize their existing borrowers to recommend potential new women entrepreneurs to the bank. That's the first intervention area. And then the second is the loan officer incentive study. It's basically a bonus and incentive scheme for loan officers to get extra bonus payments if they perform well in certain WSME lending metrics. And we're testing the best way to design that incentive scheme. So the loan introduction study can kind of motivate this based on, there's this long-standing recognition in economics and finance that what we call, fancy word, asymmetric information basically means that the lender knows different stuff than the borrower, right? So if I have capital, I want to lend it out. How do I pick a good borrower? How do I know who has a good project, who's going to repay a loan, right? So this is like a classic thing in credit markets. So that gap in information that's costly for the bank to fill, sure, they can try to fill it. They can go and talk to the borrower. They can do a loan application. They can try to get your financial records, all these things to try to fill in the gap. That's costly, right? So, so whenever there's costs and frictions, it can lead to misallocation of capital. You're more likely to just lend to the people that, look like the people you usually lend to or more familiar. There could also be wrong beliefs, for example, about women entrepreneurs that can persist in a market with asymmetric information. So, and then there's kind of this growing recognition in economics that networks, the connections between people, can be an important factor for the economy in channeling information, trust, et cetera. So the question here is, could financial incentives be used to leverage the information networks of the bank's own clients? So there's a bank, they have their existing clients. Those clients are out in the real world doing business. Could financial incentives, or well-designed financial incentives, hopefully, allow you to get introductions of potential new women entrepreneurs through your client network? So currently, as best as we can tell from our qualitative work, the bank sometimes does this. There's no formal program. Every branch does it differently. Some branches don't seem to do it at all. In some cases, it seems that there's kind of an ad hoc approach. Like if you introduce a new entrepreneur, I might take you out for dinner as a reward, or I might try to give you a slightly better interest rate on your next loan. But there's really nothing formalized around that. The existing incentives could include, cash payments. It's usually the loan officer sharing part of their bonus with the person making the introduction, gift giving, interest rate reductions, et cetera. But yeah, there's no kind of systematic program. So BP Bank got interested in developing and testing a new policy in the context of this project. So we're aiming to offer kind of two different incentive packages, both to the introducer, so the person introducing a new women entrepreneur. They get a percentage of the loan value. So this is kind of gets at testing two different values, allows us to get at people's willingness to make introductions and to make high quality introductions as a function of the amount of the bonus. And then also to borrowers. So the idea is that if you come into the bank through an introduction, then that endorsement from one of our existing clients might say that you're maybe less of a risk. So maybe that justifies a slightly lower interest rate, less of an interest rate premium to lend to you. So we're going to test a couple different incentives there. And this really came out of our qualitative work. Every loan officer we talked to said, just let us offer better loan terms and we'll get more clients. So this was like, we really pushed for this, this part in particular based on what the bank's own frontline lending staff told us. So we'll have an RCT or field experiment design where we randomize across the branches a treatment that gives a low introducer treatment and high introducee incentive, a high introducer and low introducee, and then have a control. And we'll run this in a couple different phases where different branches are in different groups. So that's kind of the first test that we're aiming to do. And then the second test, so the first test focuses on clients, kind of external, and creating a new program to encourage them to introduce new women entrepreneurs to the bank. So it's really, there's been a lot of economic change in Vietnam and many places over the last few years. There might be a lot of new businesses, or people have gone into new lines of business. So this is, reaching out to their clients and trying to leverage their social networks and business networks to try to bring in new clients. The second focus is on the bank's own lending officers. So loan officers are, the main agents who act on behalf of the bank to promote their products, including loan products. Hence, how you compensate and incentivize those lending staff is really important for the success of the bank. And so we think for a loan officer, you're under a lot of pressure, right? You're trying to get new clients. Developing a new client cohort, like if you're not as familiar with lending to women entrepreneurs, for example, that could carry, costs and risk for loan officers. They may feel like they're just in a daily struggle to maximize sales, and they don't have room to kind of experiment, learn about new customer segments, industries, et cetera. So what we want to focus on initially is whether competitive incentives or fixed bonuses per product work best to encourage more WSME lending. So in our partner bank, there's about 450 loan officers across these 51 branches who focus on lending to micro SMEs. They're supervised by about 75 managers. So in the provincial branches outside the city, there'll just be one branch manager. But in the large urban branches, there might be a team of managers that are overseeing a larger team of loan officers. So one thing you might think is like, maybe they're just not hiring female loan officers. That's actually not the case. A small majority of loan officers are women already. The average age is 30. So the typical loan officer is recruited is like a university graduate in business or economics. They come into the bank, and then there's a high churn rate initially. Many people don't make it, but the ones who make it then stick with the bank and kind of become successful loan officers. So there's been pretty high turnover of loan officers, and a lot of that is at the kind of junior kind of entry level. So in terms of how loan officers are incentivized, about 50% comes from a core salary, so that's fixed per month. About 30% is from bonuses that are tied to core KPIs from the bank that don't distinguish about the gender of clients, and that KPI was not movable for this project. So we're focusing on about 20% of their pay that's from special bonus programs that could be for any kind of product or service offering. So in our case, we're going to focus on WSME lending incentives within that. So we want to test two different ways of incentivizing loan officers. One is just based on piece rates. So if you issue a loan, you get a fixed amount. It's going to be about 1 million Vietnam dong, so about 60 Australian dollars. And then the other intervention is kind of a competitive setup where we're calling it inclusive or a multi-category contest where there's multiple prize categories. So we don't just give awards to the best performers. We've got 450 loan officers. So there's going to be a few of them that are very good. And if you feel like you can't compete with those top people, you might not even try. So the contest design does award the best overall performers, but it also has a subcategory just for new loan officers and awards for people who haven't done much WSME lending in the last year. Yeah, and then we'll kind of calibrate the budget so we have about the same amount each month. How am I doing on time? About time? Okay. That's pretty much all I was going to say anyway. So yeah, similar design. We'll have branches will be randomized into this kind of inclusive contest design and piece rate design. So we're just in the process of launching the study. The baseline surveys are just starting. The intervention phase will last for 12 months. There's some room to adjust the intervention along the way. So to learn how things go in the first 3 to 6 months, and then maybe think about adjusting and testing new things going forward. We'll be doing surveys, so like interviewing bank staff and potential introducers, and also receiving administrative data. So kind of on a more frequent basis, we'll be getting data on lending to see how the interventions are going. And then, we'll process the findings and be able to give insights to the partner bank and broader knowledge dissemination. Okay. So I'll skip my reflections there and stop there. I'm glad to discuss more in the Q&A. So thank you.
Thank you very much, Russell. Hello, everyone. Hello to everyone in the room. Hello to everyone on Zoom. My name is Sandra Alday from the University of Sydney Business School, and I'm so excited to be here. And I was a bit disappointed, Russell, that there weren't any results. Sitting at the edge of my seat and waiting for the results, but it's great to know that we were past COVID and finally onto the study. So we'd like to invite, of course, everyone in the room and on Zoom to raise some questions for Russell. Our lovely colleague Justin is going to be on hand to check the Zoom chat, as well as move the mic around in the room. But to kick things off, Russell, I might throw out the first question. Now that you're at the stage where you've done all the research and designed the study, do you have any hypotheses that you'd like to share? What results do you predict you might get?
Yeah. So we've designed these interventions to be things that we think are going to work. So relative to control, I think we expect to find effects from these interventions. In terms of there's kind of interesting theoretical questions on both sides. So in terms of the focus on lending agents, what we're really testing there is whether it works better to get them to compete or just to give them fixed incentives. And so some of the previous work that the bank's done with incentivizing lending to women entrepreneurs has focused on competitive incentives, and we've analyzed that past data. So we do have some, I guess, past results, and we found that was, somewhat effective. The incentive amounts that they tested previously were smaller than what we'll have. So I think there's a good reason to think that competitive incentives should work better than fixed rates. Yeah. And then on the financial incentive side, yeah, I think there it's harder to know. I think that that the people making the introductions are largely owners of bigger businesses, and so what's their motivation for making an introduction? Is giving them an extra 0.5% of the loan value really going to make that much of a difference, or is it more about altruism towards people in their network? Is it more about just providing liquidity to their business partners? So I think there's kind of an interesting question about how much of a kind of a response there'll be. Yeah. So
do you expect that the incentive structure that rewards the borrower more is going to work better than rewarding the introductor more?
Yeah. So that's, I mean, if we go based on what their lending staff told us in the field, then we think that would be more effective. But the magnitude of the effect, this is an example of one of these things where theory doesn't tell us that well what's going to happen. We could theorize about a lot of possibilities, but the actual magnitude of the effect is it's kind of an empirical question. So we'll have to see. But I mean, as an economist, I believe that people respond to incentives and monetary incentives. So I would expect an elasticity, but how strong it'll be, that'll be interesting to see.
Yeah. All of us can't wait, Russell, for the results. Yeah, absolutely. Any questions from? Yes, at the back.
Hello, Anne Cusick from the Faculty of Medicine and Health. I'm really interested in this as a complex behavioural intervention, which has parallels across a whole range of things beyond finance. I'm just wondering if you could unpack a few things. I'll have a little shopping list, I'm sure you'll remember. One is just to describe what the control condition is. And the other is, I'm thinking you've got your experiences for the loan targets, and then you've got the loan agents. Does that actually mean you've got 4 different treatment conditions rather than just 2? Because you're going to end up, I assume, with randomization across the loan people and the agents. So you're going to start to get smaller numbers, which is my final shopping list question, is what's your primary outcome measure and how is that going to cross across? So it's kind of a building question for people who are not into RCTs. It's how is this thing built so we can understand how you've done it. It's a beautiful design, what you've done, but I'm just really interested in that. So thank you.
And thank you for these for this shopping list. I love it. I love this shopping list. Over to you, Russell.
Yeah. So great questions. Yeah, the control is kind of the existing way that the bank already does things. So there won't be any special incentive programs offered. All of the branches are aware that interventions to encourage lending to women entrepreneurs will be active, but then the programs will be pushed and announced in the treatment branches, but not the control. And updates, for example, for the lending agents, updates will be provided on how things are going. So there'll be kind of a league table so people are aware, and that won't be provided in the control branches. Yeah, in terms of the overlap in treatments, yeah, effectively we'll be cross-randomizing. So we'll be able to, so there'll be certain branches that are that might have both incentives active at the same time. And some that might only have one, and some that may be kind of a pure control that have neither. So, I didn't want to overwhelm the audience, but there's, a lot of interesting questions there about complementarity between the two, whether there's kind of a multiplier effect or whether they kind of cancel each other to some extent. And yeah, I mean, power is an issue. I wish that we had more branches to work in. We're literally working in every branch that they have in this space. One thing, our main outcome is lending to women entrepreneurs, and we're not relying on surveys for that. So we'll have the administrative data. So we'll see every individual loan So, we could look at loans per week or loans on, higher frequency basis. So there have been, there's one economics RCT in India where they had 17 factories. They had like, 9 treatment aid control, and they just had really high frequency data. So they're able to pull power out of having higher frequency data rather than having like a large N. That's kind of the intuition of how we're thinking about that. Yeah, but we also will be doing surveys and have survey-based outcomes. And of course, there we're less powered. We just have baseline, midline, endline. So,
I've got a follow-through question on measurement outcomes, Russell. You mentioned lending to women entrepreneurs. Is that the number of women entrepreneurs that receive loans? Is it the average amount of lending per woman, or is it the collective loan amount to women entrepreneurs as a segment?
More of a focus on disaggregated outcomes, but we want to do some, like in economics, we call back of envelope calculations that talk about, how much aggregate lending we think this program added for the bank and how much it would add if we were to scale this across all branches. But we'll mostly be focused on disaggregated outcomes. So number of women per loan officer, per branch, loan amounts. But, I would say if there had to be one key outcome, it would be number of, new WSME clients. It's really the focus of this program. But there's a lot of secondary outcomes we can look at in terms of, loan sizes, loan approval rates.
Okay, great stuff. And that was an excellent answer, I think, to your question. Thank you. We've got a really great question from Zoom. And this question challenges you, Russell, to draw on what you've learned from your Myanmar study and think and reflect on what might work or not work within the context of Vietnam, drawing on what you've learned from Myanmar. It's a good question. Thank you.
Yeah. So, I would say that I'd say it's somewhat disjoint from what we're doing here, because the Myanmar study was really about product design, but, many banks in Vietnam do uncollateralized lending. I mean, basically that's what, cash flow based lending. We want to have some data that predicts how much income you're going to have in the future, and we lend on that basis. I mean, VP Bank does uncollateralized lending to SMEs, where they partner with different, apex enterprises and use data to do credit scoring. So there is some of that in the market. And I think, our work in Myanmar shows the potential of that kind of lending, and, probably encourage even more experimentation in the Vietnam market. So it's already happening in Vietnam, but yeah. But as far as, what we're doing in this study, it's a bit separated from the product design question.
Looks like you've got your work cut out for you for the next 10 years, Russell. All right. And with that, I'm very sad to say that we're kind of out of time, Greg. So we don't want to be the last ones standing in between you and a good glass of wine. So thank you very much, Russell. Let's give Russell a big hand. And over to you, Greg.
Thanks very much, Sandra. What a fascinating discussion. And as somebody who is involved in randomized trials in health, I think it's fascinating to look at the way the same methodology is applied in a different discipline and what we can learn from the way that you do that. And so looking forward to having further discussions over some drinks outside. But before we do, I'd just like to give a small gift to Russell to thank him for his talk today. This is a small gift made, I think, by some women, or certainly some entrepreneurs in Vietnam, and also some instant coffee as well, which is also hopefully going to keep you awake for the time that you're doing this study. So thank you, Russell. Thank you. Thanks, Greg. So we'll say goodbye to those online. Thank you for joining. And for everyone here in the room, please make your way outside and we'll enjoy some refreshments together. Thanks very much.